Ready. Learn capital and capitalism. Make the money work for me. Assets is the happiness of our family. Merits and demerits of using Fibonacci retracements. As we already mentioned that Fibonacci retracements have some limitations, so despite such usability and popularity of Fibonacci retracements, they offer some disadvantages, and as a trader, you should learn to use them optimally. The utilization of the Fibonacci retracements is emotional. The traders may utilize this specialized pointer in an unexpected way. Those traders who make benefits utilizing Fibonacci retracements check its viability. Simultaneously, the individuals who lose cash say it is untrustworthy. Others contend that specialized examination is an instance of an unavoidable outcome. In the event that dealers are altogether watching and utilizing similar Fibonacci ratios or other specialized indicators, the value activity may mirror that reality. The hidden rule of any Fibonacci apparatus is a mathematical inconsistency that isn't grounded in any coherent evidence. The ratios, numbers, groupings, and recipe got from the Fibonacci succession are just the result of a numerical cycle. That doesn't make Fibonacci exchanging naturally untrustworthy. In any case, it very well may be awkward for traders who need to comprehend the reasoning behind the procedure. Moreover, a Fibonacci retracement methodology can just highlight potential amendments, inversions, and counter trends. This framework battles to affirm some other markers and doesn't give effectively recognizable, solid, or feeble signs. What we conclude? Doubtlessly, Fibonacci retracements have a certain degree of limitations and problems like any other universal trading strategy. However, there is a large number of traders who find a very helpful trading strategy with the help of these Fibonacci ratios. Moreover, they successfully place transactions within the long-term trends for the price increase. However, you can use these Fibonacci retracements in combination with some other indicators and technical signals to increase your success probability. Best way of using Fibonacci retracements. It is worth mentioning that Fibonacci retracements can help swing traders to identify the reversal points on the stock chart and help them to devise a trading strategy in an efficient manner. We will be discussing how you can use the Fibonacci retracements, and we will make you understand with the help of some real-time examples. As we already discussed in the beginning, that Fibonacci retracements is simply a series of number and are developed by adding the previous two number and you get the next number in the series. Here is the example as mentioned below. 1, 2, 3, 5, 8, 13, 21, 34, 55. Evident from the above mentioned series that you will get 3 when you will add 1 and 2. So you get the next number by adding the previous two numbers and so on. Now, we will be telling how this sequence helps you as a swing trader. The relationship between the two numbers is called Fibonacci retracements and gives us a guide for technical analysis and trading strategy. Fibonacci retracement pattern. Before reversing, usually, stocks pull back or retrace a percentage of the previous move. It is common observations that Fibonacci retracements occur usually on 38.2%, 50%, 61.8%. In fact, at the 50%, Fibonacci retracements do not reflect or tell any helpful or useful information. But most of the traders use this level because after retracing half of the previous move, the stock trends to reverse. The graph shows the retracement patterns. This image shows a graphical of the inversion that focuses on stocks in an upturn. The example is switched for stocks that are in down patterns. After a stock takes an action to the potential gain, it would then be able to remember a piece of that move B, prior to proceeding onward again the ideal way C. These retracements or pullbacks are what you, as a swing trader, needs to look for when starting long or short positions. When the stock starts to pull back, follow. At that point, you can plot these retracement levels on a graph to search for indications of an inversion. You don't naturally purchase the stock since it is a typical retracement level. Pause and search for candle examples to create at the 38.2% region. In the event that you don't perceive any indications of an inversion, at that point it might go down to the half region. Search for an inversion there. You don't have a clue whether or when the stock will reverse at a Fibonacci level. You simply mark these territories on a diagram and trust that sign will go long or short. The way of drawing FIB grid. Here, we will tell how to identify the Fibonacci patterns on the chart. It is quite easy. We draw a Fibonacci grid with the help of swing points as shown in the picture. Simply draw the line matrix from the swing point high and the swing point low of a swing. Your outlining programming should accompany this element. It is a standard choice on most graphing bundles. If not, you can figure it physically by utilizing this equation. Ascertain the reach from the swing guide, high toward the swing point low. Presently duplicate the reach times a Fibonacci proportion, 38.2%, half, and 61.8%. At long last, take away that number from the swing point high. That will give you your Fibonacci levels. This diagram shows a genuine trade that I made. HS pulled once again into the TAS and afterward shaped a bullish inundating. Light right at the half level. That gave me the sign to go long. Pleasant trade. Mostly, when you create a fib grid on a chart, you will witness that the grid lines up with support and resistance areas that you would see anyway without drawing the lines in. So, you do not require drawing the lines in. Instead of doing so, you can just check at the chart and make an estimation about where the levels are. Again, look at the chart above of HS, and in case if you didn't draw the Fibonacci retracement lines in, you can still tell by just having a look at the chart that the stock has retraced 50% of the previous. However, if drawing the lines in helps you and it is better for you the FIB levels, and then by all means use it. It is you who would decide. Fibonacci retracement levels. Fibonacci retracement levels are horizontal lines that show the position or level where support and resistance are situated. Fibonacci retracement levels are based on Fibonacci numbers. Every level is liked with a percentage, and the percentage is how much of a prior move the price has retraced. The Fibonacci retracement levels are 23.6%, 38.2%, 61.8%, and 78.6%. 50% is also used, but it's not a Fibonacci ratio officially. This is a very useful and helpful indicator because you can draw it between any two prominent price points like a high and low. Levels between these 2 points are created with the help of an indicator. Say the price of a stock goes up to $10 and then drops back to $2.36. Basically, it has retraced 23.6%, which is a Fibonacci number. Many traders believe that these numbers also have relevance in financial markets. Okay,